The Greek economy has two problems. It's a solvency problem in the short term, or perhaps we might better call that a funding problem, and then a long-term competitiveness problem. And the austerity package seeks to deal with both. The funding problem will be dealt with by tax increases and by privatization measures. And the size of the privatization measures are substantial. And this will cause a lot of discontent in the Greek population because of the large a number of state employees. And you should remember that the current government's support comes mainly from the state employees and their friends in the trade unions. So this will cut right into the heart of their support and will be very difficult. In the longer term, the competitiveness of the Greek economy will be supported by reforms to liberalise markets, to allow in more competition. And of course, all the incumbent firms and the incumbent professionals don't like that. Spain's reaction to the demands for reforms has been more constructive, and I think over the longer term will help their economy out. Greece should be trying to do similar things, but there are so many people with vested interests in an unreformed Greek economy that this is what is creating a lot of the opposition now. You've got doctors, every form of professional in Greece benefits from all sorts of special privileges which restrict competition. Then you've got public sector employees who have lots of privileges as well. They benefit as well. They're opposed to reform in Greece. And then you've got younger people wondering where on earth any of these jobs are going to come from, given it's very hard to fire anybody formally. None of this crisis was created by the people who are now being asked to reform. The doctors and teachers in Greece didn't create this crisis, nor did the young unemployed, and they're being asked to adjust the most. And so there's a sense in which the burden has not fallen on the people who are most responsible for this, and that takes us back to the question of whether the bankers and the insurance companies should pay someone. The downside is, in a current modern banking system and insurance companies, you don't know who each bank is traded with. So if it turns out that you have a bank which has been risky, they may have done a lot of trades with a bank which is perfectly sound and reasonable. And if the risky bank goes under, the sound bank will be pulled down as well. And so it's the interconnections between these banks, which we can't measure that very well. We can't measure that well, which we can't regulate that well, which mean that from a practical point of view, it's actually very hard to make the people who've taken the risky bets pay for those bets or lose some of their money once things go badly. And again, it's one of these dilemmas where what you should do before the crisis begins is crystal clear, and once you're in the crisis becomes very murky and very dangerous if you make the wrong call. Germany is affected by the Greek crisis directly through its exports to Greece, which it does rather a lot of, but also indirectly through its banking system, which was somewhat exposed to the Greek government bonds. German banks have bought lots of these bonds in the past and have been holding them. If the Greek government were to default, or those government bonds were not to be accepted as reserves by the European Central Bank, then German banks would have to be bailed out as well, and this would then call the Berlin government to account to have to put up extra funds to support their own banking system. For Switzerland, this means a high Swiss franc, I think, for a couple of years. And on top of that, of course, there's the potential impact on Switzerland's exports to Greece, which are rather small. Less than 2% of Switzerland's exports go to Greece. So that part of the story is less important. The overall impact on the Swiss franc is by far the more important story. There is a tendency in these crises always to fight the last war, so that each new crisis looks like the old crisis, the last one. And so if we do have the crisis move on from Greece to Spain, there'll be a lot of assumptions about Greece which will be carried over to Spain, sometimes inappropriately. So that unfortunately the ability of policymakers to learn here quickly is pretty slow, and so as a result I am not hopeful that we'll get good or better policies over time. Instead, I think we'll see these sort of knee-jerk reactions from crisis to crisis.